Hey y'all, it's your friendly neighborhood realtor and resident wealth hacker. I wanted to try something new. So we're bringing this to you guys to try to really help be at the center of your wealth conversations. So real estate isn't just about building your own portfolio, but also figuring out how real estate can fit into other aspects of whatever investments you're looking to do. One of the concepts that we introduced earlier this month was life insurance and how life insurance can be a really meaningful tool in your overall wealth building journey. So I thought to myself, who better to talk about it than my financial advisor and life insurance bro, David James. So David James is our personal friend and former neighbor for almost, 10 years now?
About 10 years, yeah.
Which is wild. And now David is a financial advisor with Northwestern Mutual, really been successful at it. And so I wanted him to say in his own words how life insurance can be meaningful in this wealth building conversation. So thanks for being here.
Oh, love it.
Yep. David wore a jacket for us, which is very atypical, but I appreciate the effort that you made. So when we talked about life insurance years ago, my understanding was that life insurance was just for dying, right? Like, oops, I died. We called it oopsie insurance, right? But most people call it term, right? What is term?
So term, if you think about it as in like a home, you're renting term, right? Because term only lasts a certain amount of time. You don't own it. And then the reality is if you pass away, you can't use it in your lifetime. Only your family can really use it.
So I'm literally just monthly. I pay a monthly fee. And if I die on accident, oopsie, that money can then it's a lump sum payout to whoever the beneficiary is, right?
Yes.
Okay, so my total understanding of life insurance was only that. So this whole time I thought that why would I be excited about life insurance if I'm a 20 to 40 something? I'm just paying a monthly fee. If I die, great. So put it under the category of being a responsible adult, right? So I was sitting at a wealth seminar last year, in the summer of last year, and I had heard about whole life insurance or universal life insurance, but I didn't understand it because I just knew it was more expensive than term insurance. But I was like, why would I pay more money for something that's more expensive if someone's still just gonna get a lump sum payout at the end? What's the point? And none of that really clicked or aligned in my mind until someone said, well, what if you were able to use that as an investment tool or as a portion of your wealth building arsenal? Something where you can just save money in a better way. So can you tell me just a little bit about what whole life or universal life insurance is relative to term?
When we talk about permanent life insurance, things like whole life insurance or universal life insurance, the beauty about those is not only do they provide a death benefit, but they also provide tax-free cash accumulation, right?
In English, please.
So,
I don't speak
I know
Spanish.
you don't. So imagine, if you will, money that's growing, right? Because we're taxed on the money that we receive, right? And that's like the seed, right?
Yeah.
And then the harvest grows tax-free.
So like a Roth IRA.
You nailed it.
Okay.
So in fact, the problem with a lot of folks that are in wealth building mode is that they make too much money to have something like a Roth IRA.
Because the tax people say, you've made too much, you're no longer eligible to contribute to a Roth, right?
Nailed it.
Okay.
You got it. And so one of the ways to navigate around that is permanent life insurance. Things like whole life, where you're able to borrow against your money and you're able to use it for anything that you want to.
Okay, so if I'm your regular, very dutiful saver, I already know things like I have a 401k. I contribute, let's say, the max to my 401k. I used to contribute to a Roth IRA, or maybe I still do, because maybe I'm income eligible to do that. I maybe have even done a health savings account if I have kids or if I think I have medical bills. So I think I've found all these ways that are tax havens, essentially, for the money that you're earning for future use, right? So what you're saying is that life insurance is another piece that's just like that, except the tax benefits are better.
Yes.
Right?
The tax benefits are better, and you don't have to wait till you're 59 and a half to use it. And that's the really cool part, because it ends up becoming what I call a dual purpose dollar, one that we can use before retirement and even after retirement.
So this is the part that was kind of a mind blow for me, and I think it bears repeating, because what we get so used to with talks about retirement is that you can't touch it until you're 60 or 59 and a half without there being some massive tax penalty, right?
Right.
Okay, so when you've already maxed out your 401k, when you've already maxed out your Roth IRA, or you can't contribute to it anymore, all that's great, but it functionally doesn't change the way that you can live your life and invest because you're not 60 years old yet. Right? So you're doing something good for the future, but it's not really helping you today, right? So like you're still a good saver. You still have more money sitting around. That money's probably sitting in a bank account earning what? What do you get now?
0.3%?
0.3, up from 0.1.
Right? Maybe.
Inflation.
Right.
Here to save you. Yeah. Okay, so you've got all this uncapitalized cash. It's earning you 30 cents on every $10,000, which is awesome.
Yeah.
But you look up and you say, I think I could do better with this cash, right? And so I used to get a lot of the phone calls where people were like, okay, I want to invest in real estate. We can always help people do that. And if you're not ready to invest in real estate, you can put that money into, in my mind, is almost like a high yield savings account, right?
Right.
So I can call you and I can say, hey, I've got all this money that I'd like to invest, and it can go to you cash free, and you can then invest it, right?
Correct.
Okay, so then that money grows over time, and if I want to use that money in the future, I can say I'd like to use that, and if I use it, it's not penalized in the tax way.
Correct. It's not only not penalized, but the money that you borrow from it. So there's the big key there. You can not only just use it, but you can also borrow against that money. Unlike your bank. If you were to go to your bank today and you have $100,000 sitting in your bank and you say, I want $20,000, you can't go to your bank and say, hey, I just want to borrow against my money, right?
Because the money can't stay there. You actually have to physically take the 20.
You have to physically take the 20.
Okay.
Right? And if not, they're going to charge you like, what is it? 8% or something like that on a loan, right? But with permanent life insurance, it's quite a bit different. You can have $100,000 in cash value sitting in there and say, I want to go buy or invest in some more real estate, another home. And you can say, I need a down payment. Well, what a useful way to use some cash value to help you wealth build and borrow against your cash value.
Okay.
So you take that $20,000, you go buy your new home, right? That you're going to go rent out, right? And then your $100,000 though in your cash value is still growing inside that account as $100,000, not $80,000.
So this was the total mind blow for me. This sounds fake. Legit sounds fake. Like some MLM marketing scheme is going to come out and pop out and be like, hey, you've actually been investing in a Ponzi scheme. Only got you, right? So 7 years ago, I think was the first time that I heard about whole life, and it just didn't make any sense to me. But when I heard about it again last year, and I realized that this really is just a way for you to say, I have extra cash, I need to do something with it. I can save tax free. You already had me sold, right? Like, not you specifically, but the idea, I was sold on tax-free, right? So great, my cash can grow. I can keep contributing to it because I can't contribute to a Roth anymore. Awesome. Cool, the savings can continue to accumulate tax-free, but holy mind blow, I can touch that growth before I'm 60. Not only can I touch it before I'm 60, but when I do, there's no tax consequence. And then again, a whole nother layer of mind blow is even if I do touch that cash, the policy continues to appreciate as if I never touched it.
Nailed it.
Right?
Nailed it.
Why don't more people know about this?
A lot of it's education and unfortunately bad actors.
Okay, so you've seen the Burt Reynolds commercials about reverse mortgages or whatever.
Right.
I'm gonna steal your house or whatever, right? So so I think it's kind of got that stigma to it, where people are like, don't get involved in life insurance, it's a scam. Can you tell us just in regular people terms?
Yeah.
Why are people afraid of doing this? Why do they think it's a scam?
So usually the person that they sit in front of is not trying to get their goals, what they're trying to accomplish in life, right? And so they're looking at as, okay, this is a commission for me, right? And so that's one of the ways that they're looking at it. So it's very, very important when you're doing something like life insurance that you are actually having somebody walk through your entire financial plan because it has to make sense to you and dollar-wise, right? The other thing is there's something called front loading and back loading inside of a policy, right? And you want to more than likely have front loading inside of it because the fact that there's life insurance is a cost. And because it's a cost, you want that cost to come out at the beginning when you're making money.
Okay.
Right? And at the end, it's costing a whole lot less.
Okay. So I have to pay essentially to have life insurance.
Yes.
Right? So similar to term where there's a monthly fee that I'm paying, a whole life policy still has a monthly
Yes.
cost associated with doing this whole savings deal, right?
Correct.
So I think like one of the questions that I got on the content that we put out was like, well, hey, when you borrow from that life insurance policy, doesn't it cost you money? And the answer is yes, I borrow from myself with a cost associated with it, right?
There is an interest.
There is an interest for me to pull that money out, comma. The policy is still appreciating at its full value at whatever the market rate of return is.
Correct.
And so in essence, the cost of borrowing is net against whatever the appreciation is on the policy, right?
Right. So it's almost nil by the time you pay back your policy. Your interest rate is virtually nothing.
Virtually nothing.
Right. And everybody's different on what their interest rate might be.
Right. Right. So, and that's specific to what type of investments your cash that you invested is sitting in, right?
Correct.
Because if you invested in super conservative stuff like low yield bonds, your monthly accumulation on that's not going to be, or your annual accumulation on that's not going to be huge relative
Right.
to whatever the cost of borrowing is, right? So I think a really important distinction is that if you are going to use this as an investment policy or an investment, a piece of your portfolio, that it's different for everyone, and that you actually need someone who understands it, who is an advocate, who's not just
Yes.
trying to sell you something to set you up in the right way.
Correct.
Right? Okay,
Yeah.
so like interpersonally, you helped us at the end of last year set up our universal life insurance policies.
Yes.
Right? Okay, so I came to you and I said, hey, we want to be good stewards of our money. And we also know that we have to save for things like future investment. And we also know that we need to save for things like Benji Bear's
Yes.
college, right? Like,
Yes.
So I think a normal thing to do is to be like, oh my gosh, we have to go set up a 529 plan. We have to go figure out how to save for a down payment on another real estate investment or whatever it is. And all those things can really start to get scary, especially when you think about like 529s have to be directed in a certain way. They're earmarked for certain future usage with cash, right?
Right.
But you came to us and you said, well, can you think about life insurance as like a high yield savings plan for all of those things, right?
Yeah.
So tell me a little bit like
Sure, how we walk through that process.
Yeah, walk through that process.
So yeah, when we sat down, the questions were whole life and then a universal, right? And then we looked at whole life as a safe dollar bucket, not inside the market.
So I think there's confusion here. So term is oops, I died.
Yep.
We took that totally off the table.
That's off the table for right now.
And then there's a whole other thing that's called whole or universal.
Correct.
Are they mostly the same?
They're mostly the same in that they grow tax-free.
Okay.
The difference is how the money is used, right? And when it comes to whole life, we are not inside the market whatsoever.
Okay.
Right.
So whole life is just going to give you maybe that lower annual yield.
Correct. And so with different companies, you're talking 4 or 5, maybe 6%, and then there's a lot of expenses, and that's some of the things that your advisor has to sit down with
Sure.
you and show you.
But Universal's got more flexibility.
Universal does have more flexibility.
Okay.
Because
so if you wanted to be a little more aggressive as with a longer investment horizon, you could. And if you wanted to be a little more conservative,
you could
could.
also as well.
Okay.
And your payments can vary too.
yep. So you essentially get to say, I want a target benefit of X amount of money, and then we back into what we feel comfortable contributing on a monthly basis to get to that place.
Correct.
Right?
A lot of reverse engineering.
A lot of reverse engineering. Yeah, so poor David had to come to our house, what, 4 times?
It was about that, yeah.
Maybe more.
I mean, we had fun. So.
We had he had to come to our house several times for us to hash out how to do this. But I think that the point that I want to make here for why it's relevant to the people we're talking to is that the purpose of this is that it can be used to say, I want to save for anything. And I can take cash that would normally be sitting at maybe a 0.1 or a 0.3% interest.
Yeah.
And as long as I'm comfortable with committing to something that is a monthly withdrawal, basically us moving money into what feels like a savings account to me, that money can continue to appreciate at a rate that you can get in a market sort of account, like an investment sort of account.
Correct.
Right?
And that's where universal is, that where you actually are invested into the market.
Right.
Right. And so a higher cash accumulation is very much possible inside of something like what we call a variable universal.
So if I contribute, let's say, a few $1,000s a year, every single year, and then in 4 years I look up and I say, hey, I've got this real estate investment opportunity, but I've only really been saving this money into this whole life, or this universal life account. I haven't separately been saving for a down payment on a house, or an investment in a multifamily syndication, or to flip a house, or if some investment opportunity comes across my desk, let's say it's real estate related, I can turn around and go to that policy down the line and say, let me use that money.
Yes.
Right?
Nailed it.
Okay. And that money, because it's been going into a higher investment sort of account, is worth more than I contributed by a decent chunk.
Yes.
Right? Okay. So I think that's the magic piece that I really didn't understand. So let's say in 5-6 years, there's $50,000 sitting there. I say I want 40 of it. My account in life insurance will continue to appreciate as if there's still 50 in it. But I can now go take this 40 and I can use it to invest into real estate.
Correct.
What if I never pay that $40,000 back?
So what ends up happening is that the amount that you take back plus a little bit more will be taken off the death benefit.
But my death benefit's like huge.
Yeah, if your death benefit's $1 million or whatever that might be, let's just say it's $500,000 and you have $60,000 worth of cash value, you've borrowed 40 because we never want to pull the full thing out.
Don't pull the full thing out.
And then you pass away, then your family will get the amount, that
The
amount.
$500,000 less whatever I took out.
Exactly.
And that death benefit of $500,000 is separate from the $500,000 I saved. It's basically being paid by that monthly sort of charge that I have to have this policy.
Correct.
Right? So no one has to go back and pay that $40,000. It's simply net out of the death benefit that I had.
You got it.
Right?
Nailed it.
Honestly magical. So I think that's why I wanted to just introduce this concept to the database. It was something that was very life-changing for me individually, for Andy individually, for us looking at having a Benji Bear and not knowing how much college is going to cost. Like, we sat down and what did you say? I was like, oh yeah, we'll say like $150,000. And you're like, no. How much did you tell us it was going to need to be?
Oh, I think it was about 300,000.
Yeah, it sounds like vomit.
Yeah.
How am I going to get 300,000?
I mean, it's a very long way from now.
Yes.
You know?
But it's a ton of money, right?
It's a ton of
money.
money.
So like the specter of having to save that much money on top of, whatever else we feel like would be wise investment decisions is really hard if it's not powered by something that has a lot of flexibility, right?
Right.
Well, thanks for sitting with us here today. This is a new format for us, but really it was brought around by the idea that we as business people should help our people think about how to shore up their life. And so what I'm endeavoring to do through 2023 with the help of people that I trust is help answer those questions. So when you think about me and you think about real estate, think about also how we can help make sure that the pieces of your life are taken care of. Thanks for joining us. Talk to you soon.